I work for Nikko Asset Management, which is the third largest investment company in Japan, although we have a great deal of overseas operations as well. About a little bit more than half of our money is sourced from Japan, and the rest is through our Australian and New Zealand affiliates, Tyndall, which I'm sure you know of, especially since you know Chris Briggs, who's in this conference. We try to be objective about Japan. It's not easy, obviously, if you're located in Japan. But, of course, we have a lot of AUM tied up in non-Japan. And if we make the call wrong and we have too much in Japan, it hurts. For instance, I run the Global Investment Committee and several other committees. And there's about $1 billion that's tied directly to it, and a good chunk of many billions of dollars that is indirectly tied to it. So if I'm giving you bad advice today, or if you think it's too optimistic, it's certainly going to be my hide that pays the price, because we're measured just like all of you are. And so I'm going to give you a chance to hear some new things about Japan that you probably have not heard about. The media is quite biased in Japan. About Japan, and everyone is sort of in the reversion to the mean mode. But I think it's quite clear that Japan is not going to revert to the mean. It's not going to be perfect. It's not going to be an emerging market. But Japan certainly has changed already and is going to continue to change. So you really should watch this space and do more than just read the headlines in the newspapers about Japan. The important thing to realize about Japan really is that things have been changing for quite some time. Actually, it's been 10 years since corporate governance started to change, and you wouldn't know that by reading in the newspapers. But it really happened about 10 years ago. And that's when, you might recall, there was a lot of corporate raiders in Japan who were trying to take over companies. And a lot of companies responded, some of them by issuing poison pills, but a lot of the other ones also started to actually do something about changing their corporate governance and emphasizing profits. Whereas Japan, as we all know from history, has been a sort of a market share and a non-profit-oriented country. It really started changing about 10 years ago. It wasn't just profits, it was also dividends and other sort of corporate governance measures. And when I finally get these charts up, I can show you some interesting charts. But it happened during what was called the Koizumi era. There was a prime minister named Koizumi about 10 years ago. And he did really recommend that Japan change. And it started to. And then and things improved dramatically. I mean, for instance, the dividend payout ratio rose from 15% up to 27% in 2.5 years. That's a pretty big change. It reached the US level of dividend payout ratio at the time. However, unfortunately, we had a series of crises that covered and overshadowed the progress in Japan. First one was obviously the Lehman shock. And then you had the floods in Thailand were actually a huge dent in Japanese corporate profits. Then, of course, we had the Tohoku crisis, the nuclear crisis. And then we also had the China riots, which really hurt corporate profits. So a lot of the improvement was hidden by these factors. And essentially what occurred was after the Tohoku crisis, Japan really woke up. They really realized, oh my God, we really have to do something different. They've been living sort of in a cocoon for a long time. They've been getting by. I mean, everybody talks about how disastrous it was, but if you've been to Japan, you can realize it's not a disaster. In fact, it's really quite an advanced, stable culture and civilization. But they did realize that they had to do more. And the goal actually was enhanced by winning the 2020 Olympics. That has given them a major target. It has increased everybody's enthusiasm and colleague-oriented behavior such that they will actually strive harder to internationalize. And it really is about internationalization. I don't have a lot of these on my hidden slides, for instance, some of the first things that Abe did when he came in is that he arranged or passed laws to triple the number of English language teachers. in the country. He made many changes in the school curriculum to improve the English learning capability. He has a goal. He set a goal of a large number of English graduates and PhD students. So, and he's also increased the immigration laws such that there is quite a labor shortage in Japan right now, and so they are quite rapidly increasing immigration. It's controlled immigration, and Japan will never be a completely free immigration country. But it's certainly loosened up things a great deal, and it's all towards this goal of increased internationalization. If you know Japanese people, that you'll realize that they'll never be completely international. I mean, they have a very distinct and they're very distinct culture, and they're very proud of it. Some of the bad things will start to lessen, and a lot of the good things hopefully will not disappear. Like sushi, for instance. I have the first chart that you cannot see is actually a chart of the GDP of Japan, the nominal GDP, year-on-year growth, and the chart of corporate profit margins. And the thing that will really stand out for you in terms of all these things I've been saying about improved Japanese corporate governance is that nominal GDP just goes flat. It's just 0% all the way since 2005. And unfortunately, I wish I could show it to you, but before that, corporate profits, margin, and GDP tracked together. But starting in 2005, they diverged extremely sharply. GDP was flat, but corporate profit margins surged. And that's something that is not very usual in the world. It is really because of Japan's change in philosophy. And it's really quite shocking to many people when they see this chart. It also tends to reinforce the, or I shouldn't say reinforce, it cancels out the view that economic growth determines corporate profits. And if you look at many countries, it's actually not true. And corporate profits, for instance, quite often lead to stock market performance. But look at China, for instance. Super strong economy, but one of the worst stock markets in the world over the last, since 2007. So it's really quite important not to let people convince you that because Japan just has slow growth, that it's a useless stock market. It's definitely not the case. Another important item is the wealth effect. And one of the jokes about Abenomics is that ABE is how you spell his name. Some people say it's asset bubble economy. Because he is definitely trying to start at least a semi-bubble. He's trying to get the stock market. I mean, when you talk to government people, they say they want the market up, and they want real estate prices up, and it's working. Real estate in Tokyo, I mean, there are cranes everywhere. All these plots that I used to go by, I've been there for 10 years, just sitting there. Not all of them, but a huge portion of them are actually under construction now, including some huge buildings actually in the downtown area. So the goal is to get the wealth effect up via this asset bubble, because how depressing is it really if you are sitting on a house that keeps going down in price for 10, 20 years? I mean, that is your biggest asset. And the stock market doing nothing for so long. It's very depressing, and it has a huge effect on negative wealth effect. That's one reason why Japanese economy has been, I'd say, struggling for the last 2 decades. But now real estate prices are going up quite significantly. Rents are going up. Especially corporate rents are rising quite rapidly. So the asset bubble economy, the Abenomics, is actually working pretty well. And the stock market is up sharply, for instance, from its lows. I guess I can talk a bit about the stock market. You know, many people, complain about the Japanese market, and it's true that it's been a very weak market over the long run. But you got to consider where it started from. Most people started thinking about it during the bubble period when the market went up to like 60 times earnings. And it's actually, earnings have grown during that time, but the stock market has fallen by more than half. And that's because of this just massive derating. And China's been seeing that for the last 7 years as well. But 10 years ago, the stock market bottomed out at about 15 times forward earnings. And its earnings obviously have been bouncing around with these crises that I went through before. But essentially, the PE ratio has remained very low. Right now, it's on about 14 and a half times forward earnings. Earnings are going quite quickly. And so when you think about Japanese stock market, really don't think too much about the last 20 or 30 years. Start looking at the last 5 years or 10 years when things actually normalize on the valuation front. That's a much fairer time frame to consider. The other thing to I guess, mention about the stock market is the huge flows that will probably be coming into the stock market. You've probably read about the massive, I guess it's the world's largest pension fund, which in Japan is called GPIF. It's a government pension fund. $1.5 trillion, I think it is, something like that. And it's been managed exceedingly conservatively for a long time with a huge portion in JGBs. And one part of Abenomics is to change that, and they already are changing it. They've fired, basically, the chairman of the committee, and they're putting in their own people, basically to force the diversification of this into not only domestic equities, but into foreign securities. And that's going to have the added advantage to those in Japan who want to weaken the yen, because it will, and it already is, causing some amount of yen weakness whenever they make some new announcements. For instance, just last week, they had a cabinet reshuffle, and they put in a man whose name is Shiozaki. And you'll probably be hearing this fellow's name in the future. He's actually one of the biggest reformers out there. I mean, he's very aggressive, a very soft-spoken person, but he's very aggressive. He's been made the Minister of Health, Education, and Welfare, which is in charge of this pension fund. So you'll be seeing a lot more news about what this pension fund will be doing. And like a lot of things in Japan, once the big guy starts doing it, a lot of other people start doing it. And so there are, I forget the numbers. I mean, they're all so high, it doesn't seem to matter anymore these days. I think it's $500 billion of pension funds that are very similar to GPIF. And they basically copy it in most respects. So you've heard about this wall of money, you know, probably for 20 or 30 years that could come out of Japan. And it's going to happen, actually, finally. I mean, there have been waves of this money, because Japan is the biggest net saving country in the world by quite a large margin. And if this money really does start to flow overseas, watch out. It's probably going to hit Australia as hard as you can probably imagine. And there's also that wave probably coming out of China as well. Once the Japanese feel pretty confident that the BOJ and Abe are going to do whatever it takes to make inflation stick, and that they're going to stay loose and the Fed is tightening, they're going to find, and that, you know, if they keep their money in the bank at 0% and inflation is going at 3%, they're going to wake up, right? They've always been afraid of losing it on the currency, and they've been burned many times in the past, but this time really is quite different. And so watch out for that wall of money. Looks like I want to be up here the whole time, I guess, but I can do it. Don't worry. I can talk about Japan for hours, actually. I've been studying it since Sorry? Okay, thank you. I've been studying Japan since 1988, and when I first went there and worked for competitor, probably one of these names up here, at that time. And I can really tell you honestly that things are different there. It's not just another fad or another cycle. I really do think things are different there. It's not going to change completely, but I would encourage you not to think skeptically about this whole reversion to the mean. It's just going to go back to where it was. And I mentioned the BOJ, for instance. The Bank of Japan has been a stodgy Bundesbank-like operation for ages, even though it started QE. It was the first in the world to do QE. It started in 2004 doing QE. And then when things got better, it basically lowered. It did reverse QE. It lowered its balance sheet all the way back to where it was before they did it. And it was not a small amount of QE at the time. They tried a lot of things, but they never really would make a strong effort. And they could never convince people that they were going to get inflation up no matter what. And a lot of, the way we operate in the world is human psychology. And when the BOJ spoke, they'd say, oh, well, we're doing this and that. And then they'd always end with, but, we don't think it's going to work. It's true. It's absolutely true. And I forget the year. I'm getting too old for this job. But I think it's 2004 or 2002 when they changed the Bank of Japan law. And they made it such that in the past, the governor would rotate between the Minister of Finance appointee and a Bank of Japan appointee. And you could almost time the bull markets when the MOF guy was in charge. And the BOJ guy, after 5 years, would come in and he'd just quash it all. And so people got quite a reputation, the BOJ got quite a reputation as being kind of tough. And in 2004, they changed that, such that it was always going to be a BOJ guy appointed. And that made it almost guaranteed that it was going to be a pretty dull future, a sort of Bundesbank-like attitude going forward. But they Abe, when he first came in, basically was given a present in that it was also when the term of the BOJ governor came due. And he basically forced the appointment of this new man named Kuroda. And Kuroda actually was a MOF guy, but he was sort of a maverick MOF guy. He was the only guy in Japan who actually believed in inflation targeting during most of his career at MOF, and then he was the head of the ADB for, I think it was 7 years. He's actually a true believer in this. The BOJ guys, over the years, they scoffed at inflation targeting. They thought that a lot of what the Fed was doing was nonsense. They would really actually kind of chuckle and laugh about it because they thought it was just so absurd, sort of the way that Bundesbank feels. But Kuroda is a totally different guy. And once he was appointed, he pulled out this gigantic bazooka, and even before he started in April, the yen weakened dramatically. And as soon as he was appointed, basically the yen started to get very, very weak. And he's got another 3.5 years. He's only been in for a year and a half. So he's not going away. So I don't know what your investment time frame is, but I doubt it's I doubt that it won't be affected by this person. He is going to be a very important person whether Japan does well or not. And he's not going to change his mind. He's been a little bit stubborn recently because he has said that he's going to hit his target, and everybody's doubting him. In fact, even we are doubting him now. We didn't doubt him before, but he wants 2% inflation, what they call core inflation, which does not include energy prices. And he's probably not going to make it unless the yen weakens a lot. He might just be saved by that because the yen is starting to It went to 107 last night. So that will keep the CPI and what they call the core CPI at a rate that will probably work, but it's kind of cheating in a way. In order for Japan to actually hit its core CPI target, you'll never read about this in a newspaper because nobody understands these statistics, even me. And the rental component, I don't know what it is of the Australian CPI, but in the States it's 38% of core CPI, for instance. In Japan it's also quite high. I think it's 28%. And that sub-index has just been going down, down, down consistently. It started to bottom out a little bit for a couple months, and then last month, unfortunately, it dipped down again month on month. But in order for Japan to hit its core inflation target, its true core inflation target, they have to get rent up. And of course, as I mentioned before, Abe is going to do everything he can to get this going. The third arrow, I've talked a little bit about that already with the immigration and the, I should mention things about the labor laws. I mean, he's not going to change Japan overnight. He would lose the next election if he did that. But he's doing what a lot of the companies actually want. They want more immigration, especially in some areas, but they also want a loosening of what were some extremely tight labor rules regarding contract labor. And the prior, more liberal administration had made some pretty tough rules about you can't hire a contract worker for more than a year without offering him a full-time job or something along that line. And the companies hated it. Toyota, I think 25% of their workforce or something like that is contract labor these days. So he's changing that, and he's loosening those rules, which makes them quite happy. You never read about this in the newspaper. He doesn't want you to read about the newspaper. He doesn't want Japanese voters to read about this in the newspaper. But it's what companies want. It improves their productivity. Looks like they're finally, oh my God. But this is not the right one. This is the old one. But I don't know. I'm not compliance approved for this. Should I do it? Maybe I shouldn't. Well, I'll just show, this chart is actually the same as the newer presentation, so I think that should be kosher, right? This is the blue line was what I was talking about before, the nominal GDP, basically flatlining and corporate profit margins soaring. So that is something that I hope you'll remember. That's probably the most important chart that I'll show you. And we're just going to flip through these. This is also on my presentation. And you can see here, this is the dividend paid by the TOPIX, the Tokyo Stock Exchange Index, like the Dow Jones Index or S&P. So it's how much cash dividend you would get if you owned one share of the index. And you can see that, as I told you, the dividend just exploded in 2005 after their initial effort to change corporate governance. Then we had a crisis, and now it's back up to basically where it was. It's going somewhat parabolic, which is a very, very good thing, especially when you consider the dividend yield in Japan is more than triple the 10-year bond yield, and it's infinitely much larger than a bank deposit. So it's very attractive. When companies raise cash dividends, the stock market almost always loves it. So the payout ratio, as I mentioned, rose from 15% up to 27%, and then ignore the spike. And then it basically started to fall again because corporate profits rose so quickly. They were rising faster than dividends. And so it's dipped down to 25% or so. We actually think that dividends are going to double in the next 5 years, and the payout ratio is going to go to 37%, which is the current US level, and then hit 50%, which is the European level, in 10 years. And this is going to be a huge important factor for Japan, because the individuals in Japan really need income very badly, and so they're going to be quite interested in stocks that pay dividend. This is the derating of the stock market I told you about. It went from a PE of 60 times all the way down to 15, and how can a market compete with that? I mean, it's gonna be bad while it happens. It happened slowly in Japan. They dragged it out. There's no doubt about that. I talked about the BOJ. I talked a good bit about the third arrow, but the first one I didn't talk about, and that is, it's the biggest third arrow that I can conceive of. He's going to cut corporate tax rate by 2% per year for the next 3 years. That's not a joke. That's a lot of corporate profit margin improvement. It'll probably start at the beginning of next fiscal year in April. He's got the votes. He controls both houses of Congress. He can do it. So he's going to do it. In fact, he'd like to do it more, but MOF basically won't let it happen. The other one to really watch out for is TPP, which I think you all know about. Right now, what's holding it up is the U.S., not Japan. Before the election in November, the Democrats are refusing to put it on the table. But especially if the Republicans win, I don't think there's ever been a free trade agreement that they have not voted for. And Obama wants it. So watch out for TPP. I definitely think it's going to pass quite quickly in next year. And that, most foreigners think, is the biggest third arrow out there. That really shows that Japan is going to make the sacrifices, especially in the agricultural side. But in reality, Japan's already made some pretty big sacrifices. It just concluded an FTA with Australia and lowered its meat tariffs quite significantly. Not as much as people would like, but that was almost sort of a precursor to what they plan to do with with TPP. So good news is sort of on the way there for Japan. They know they have to do this. The average age of the farmer is, what, 60 or 65. And they didn't protest that much at all, I don't think, on the Australian FTA, which is really quite shocking. They kind of know that Japan has to do something because they can't get the young people out there to do it. And so they're consolidating farms, they're allowing corporate management of farms, they're downscaling the bureaucracy of the agricultural cooperatives. Another one is the public-private partnerships. For instance, they took the Osaka Kansai airport and they put it on a lease to private ownership. And they're going to be doing this with a lot of infrastructure in Japan, ports, airports, highways. So watch this space. It's a very important part of Japan. And casinos, you probably heard they've finally made that decision. I'm not a big believer in casinos, excuse me, Lassiters, but they think it will attract a lot of tourists. And the tourism thing is, I'm going to skip by these demographic charts, except for just to say that don't let anybody tell you that demographics controls stock market performance or corporate profits. It's just not true. I mean, we've studied this. I should have more charts on it, I'm sorry. But for some countries it works, a lot of countries it doesn't, and most of the ones in between, it's completely unprovable. I mean, it depends on what you do with your workforce and not whether your participation ratio is rising or falling 0.1. If you've got technology and like these innovation rankings for Japan being the 5th largest in the world for innovation and 2nd in the world for scientific infrastructure, that can do a great deal as, for your corporate profits and the performance of a stock market. I know that's really hard to believe, but it really is true. I also wanted to mention, too, that we do these charts. I don't have this one up here in this presentation, but you know, the working age population of Japan goes basically like this, and this is 1997. It starts going down. Corporate profit margins are going up like that. Just complete, almost reverse correlation, negative correlation. Wages are starting to rise. Dean, you want to stop me and just go to Q&A?
No, not at all. I'm just, technology unfortunately is working against us today, John. The online questions have also gone down, but in a moment I'll certainly
you have to
throw
use
the microphone
your
around.
voice.
Yeah. Obviously cheap Chinese knockoff in terms of technology, yeah?
I mentioned tourism before. It's booming in Japan. I don't know how many of you have been there recently, but hotel rooms are booked. There's tourists everywhere. It's a great thing for Japan, and it's going to be increasing with the 2020 Olympics. The GPF I talked about, I can skip some of these slides. Abe is going to be around for quite some time. He's got a very strong majority.
Perhaps, John, you could just talk to the demographic. I know you've got a slide up there. I'm having trouble seeing it, but there's obviously been a lot of dialogue and discussion around Japan in terms of very much an ageing population. The birth rate's been in decline for a long period of time. I'd be keen on your thoughts as to what impact that has over the next, say, 10, 15, 20 years for the Japanese economy, particularly in the context of what it is the Prime Minister is trying to achieve.
I'm not going to be doing this in 15 years. I can guarantee you that. And it's a bit of a negative factor. There's no doubt, ceteris paribus, if all things stay the same. But I think if there's one country that can actually do well with an aging population, as it's shown already with corporate profits zooming despite the working population sinking quite significantly, it is Japan. I mean, they really are good. They make 99% of the world's robots. They are really good at organizing things and making things efficient. They'll have to increase their immigration, for sure. And they've already started. I mean, they've made it so much easier for people, especially in the ASEAN region, to enter the country. And yes, there will be quite significant growth of immigration, but it's not going to be an open-door policy. The other thing to recognize, too, about Japan, just like most multinational countries like Australia, is that a lot of their growth doesn't come from the domestic market. It comes from global growth. And for Japan, that's extremely true. And so corporate profits will be more a function of global growth than they are of the domestic economy.